Hello, everyone. Welcome to another Webinar Wednesday by Smartkarma. I'm Michael Tegos, and I'll be your host this morning. And I would like to welcome Roger Xie, who will present on the topic of consolidation among China's brokerage firms. As the audience starts settling in, some housekeeping reminders as always. You're very welcome to send your questions for our speaker using the Q&A button on your screen. Please do not reshare or reproduce the contents of this webinar without express permission. We will have, as always, a recording of this webinar available on the registration page, so no need to worry about that. With that, I would like to introduce Roger, who has 10 years of investment experience in public and private equity and specializes in deep dive fundamental research in China and the US market. Roger, welcome. Thank you for being with us this morning, and please feel free to take it away.
Thank you, Michael. Good morning. I say good morning, everyone. I would like to share some of my thoughts in the China brokerage universe. So before we get into the details, I think it's very helpful for everyone to look at the China brokerage universe from a very high level, particularly from the regulatory levels, because China's financial industry is quite different from other parts in the world. For example, in US, if you are familiar with the US or maybe a global financial entities models, you will know most of the firms apply combined models, meaning they can do all kinds of business in banking, in insurance, and in brokerage business. But however, in China, it's quite different. China is divided. The China financial market is divided into three categories: it's a banking, insurance, and securities. And they have three regulators. CBRC actually is the regulator for banking. CIRC is the regulator for insurance business, and CSRC is the regulator for security business. Because of these structures, a lot of people might get confused about the recent trends. But I just want to show some of the data to you that collects in 2019. The top 36 banks actually they generate profit 1.7 trillion RMB, and the top 36 brokerage firm actually generate profit 102 billion RMB. So if you look at this scale, they are very different. If you look at SSI, actually the bank is like 10 times or more larger than the brokerage firm. On the profitability side, the figure I show you, the bank can generate roughly 17 times of profit to the security firm. So that gives you a sense the scale of these two businesses. So in realities, actually, bank is the biggest player in the financial industries, and the second one is insurance, and the brokerage firm actually is ranking at the last. So this size difference give their priorities in the financial reform that I will touch upon later point. So if you just purely look at the China capital market, and the security firms actually experience a roller coasters for the past 5 or 6 years. If you're familiar with China Asia market, you will know roughly 5 years ago, the so-called China Asia market crash from its high, and the brokerage firm is a proxy for the greater China Asia markets, and their trading volumes, their IPO deals dropped significantly from the middle of 2015. It takes roughly 3 years to digest this market crash. The reason, I think a lot of people might study the reason for this market crash 5 years ago. I think it's mainly driven by the high leverage used by the security firms, by the financial systems. And if you look at the trading volume wise, the average daily turnover, the average daily turnover has dropped to the lowest in the Q4 2018 is around 350 billion per day, 350 billion RMB per day. And the revenue the revenue for the brokerage firm as a whole actually dropped 50% in 2018 from their highs in 2015. So if you look at this figure, you will know that's a very painful process for the brokerage firm to digest the tumors from the market crash. They face the stricter regulations as the market crash. If you still remember that 1/3 of the Asia, the so-called China Asia, is suspended, cannot be traded on some particular days. So that's a huge issue for liquidity issues. So after that, the regulator came out with very strict rules for doing some very innovative business. For example, for particular financial products, the security firms cannot be traded, particularly in the derivative markets. And second is the market experienced high volatilities after 2015. And lastly, and there are increasing competitions in the brokerage business as well. As we find out from our slides, they are, according to the Securities Association of China, there are around 100 licensed brokerage firms in China. And I also reading an articles, and the top 30 Chinese brokerage firm, their profitabilities actually cannot compete with like our international leaders in investment banking leaders such as Goldman Sachs global investment banking business. Why? That's the reason. That's a competition. That's a too much brokerage firms, smaller brokerage firms in China markets. Secondly, the fee rate is quite low, and they can make a lot of monies from IPO deals and the security trading. So finally, we have experienced some recoveries in China Asia markets and security business as well. This starting in 2019, China has launched, they call Starboard in trading in Hong Kong, in Shanghai, and this year they also want to launch IPO registration systems in Chinex boards in Shenzhen as well. Why do I want to mention all these innovations? Because this is a very important steps for China markets developments. If you study China market for a long time, you will know that's a huge bottleneck for the IPO pricing. The IPO pricing is artificially set too low for the markets. So it creates a lot of issues about how institution players want to allocate money to get into IPO deals, whether they go into secondary market or go into the primary market. So, and that create inefficiencies between these two markets. They also create a ripple effect in the pricing, in the valuation, in the secondary trading market as well. So if you study Asian market, you will know the IPO process and IPO pricing actually is a very, very important issues for China's markets development. But luckily, we have seen some progress for the system to move toward they call IPO registration. What does it mean? It means let market to decide what's the price, what's the IPO price will be, and what's the volume, what's the volume, or what's the size of the IPO deal will be by the market, not by the regulators. So I think these two developments actually a lot of investors have overlooked from reform perspective. I've highlighted this important development through my through my insights at Smartkarma early this year. So I called for a bullish on China Asia market since the early this year from February, based on this reform process, because I think this process could drive could solve a lot of issues the China Asian investor faced in the past, and also can re-energize the investors' interest in the market. So luckily, the China Asia market's average daily turnover has rise from 350 billion, the lowest point in the Q4 2018, to roughly 7 billion in 2019, and they continue to rise early this year. By July this year, it has exceed 1 trillion ADTs in July. So if you look at the activities and the trading volume wise, this will be a better time for China brokers. They have in the upper trend in their in these trading activities, in the IPO deals. They can their profitability will rise as well. I think that based on all this framework, I think now is a better time for the Chinese brokers to consolidate in their space. We talk about the fragmentation in the China brokerage space, and from the regulatory side, there are actually two announcements early this year. One actually is from the banking side. We have mentioned earlier, bank actually the size from the asset or the profitability wise, bank is maybe 10 times or more larger than the brokerage firm, and the regulator encourage a bank to enter into security business. I think as a pioneer process, maybe the two largest bank like Bank of China or ICBC might pioneers some of the activities, but I doubt they will have a huge interest in this, because they are a banking business basically is a interest margin business. It's very stable and very profitable business for them. And the investment banking business for them actually is account a very, very smaller size for bank. So I still suspicious about their motivation to spend a lot of effort to enter this security business. But on the other side, we also read the news that the regulator also encourage the brokerage firm to merge as well. This is very interesting. I think there are a couple things. I think that will be the tailwind for the security firm. One is, if you look at from the macro side, some people will use they call it securitization ratios, meaning use your stock markets the market size compared to your GDP. If you use this figure to apply to China, and this securitization ratio is roughly standing at 60% to 70% range, and is much lower than other countries. For example, like US or other developed countries is standing at roughly at 140 and to 180 range, 180% range. So if you apply this, we will say that's a huge room for securitization to growth, meaning you should put a lot of firms to become a public company to be in the market of trade. So if you think about that way, that's a huge room for growth. That's one thing. I think it will be. I think China is into a kind of a sweet spot to put in more firms to securitizations. The second thing I mentioned earlier, and now after a very painful 3 years recoveries, finally, with the reform in the capital markets, particularly in the stock board and in the Chinex board in Shenzhen, and we have seen the trading activity return to come back to 1 trillion level. This is the highest ADT, average daily turnovers, in China Asia markets so far. So it's all this industry trend is favorable for the market player. And lastly, I think from a consumer's perspective, I think most of the retail investors, or maybe the most of the participants in the markets, they allocate a lot of their savings to the housing market, to the real estate markets. I think that we will see a shift as this happened in US to a security market as well. Meaning they should put quite a large portion of their wealth into a stock or into a fixed income product. So I think based on this strict trend, and Chinese broker should enter into a sweet spot to develop, and all this will encourage the market the security firms to merge, to consolidate, to become a big player, to compete with other global international investment bank. On this slide, I just highlight some of the recent trends. That's in slide number 3, the recent trends in the security business. And the brokerage firm's revenue in June this year actually grew 41% year over year. And the profit has jumped 72% year over year. It's a huge growth. And I mentioned about the market trading activities. The ADTs that's in June has reached 725 billion per day. And that's roughly a 57% increase from a year ago. The same thing happened to the IPO market as well. It jumps 148% year over year based on the fund raised in the IPO deals. And lastly, I think the market has the consensus for the market for forecasting the 2020 year annual ADT is still too low. They forecast at 750 billion. I think, but in my view, this figure will be revised up. My forecast for this figure is standing at around 850 billion per day for the whole year. This means in the second half, particularly in the second half year, we will see a surge in the trading activities in the China Asia market as well. Lastly, I think we should jump into the speculations happens in the space. This is reported. This is a slide. This is on slide number 4. This is reported in April, and the media said CSC Financial and Citi Security will merge together. So why this speculation come from? If you look at these two structures, actually, the history about CSC Financial. CSC Financial actually is created by Citi Securities like 20 years ago through a restructuring. But at the current stage, Citi Security, the tickers 6030 HK, the largest shareholder is Citigroup. It's a state-owned enterprise. And on the other hand, CSC Financial 6066 HK, its largest shareholder is Central Huijin and Beijing governments. And Citigroup also hold a minority stake in CSC Financial. So because of this long history, this firm work together and they have a common shareholders. So that's always has speculation. These two firms will merge together. But I think most people, if you work in Hong Kong, looking at China capital market, most people will know CICC. But actually, if you look at China Asia market, CITIC Security is the #1 players by any means in trading, in IPO deals, in wealth management, etc. So it's all ranked #1. So if CITIC has merged with CSE Financial, it would actually generate one of the largest brokerage firms in China markets. It will have asset more than 1 trillion. You will have based on these figures, I think these have revenue by 57 billions. Is also ranked #1. But these two firms actually has filed disclosures to deny the merger rumors. But if you look at all this 30 plus publicly traded security firm, there's no other security firm has this very common shareholder structures. So people are always speculate these two firms will merge. And if you go back to the history, I mean, the most recent deal is the Shenying Wanguo merged with Hongyuan Securities in 2014. But at that time, that deal could be done, has been done pretty easily because both firms, Shenying Wanguo and Hongyuan, they are owned by Central Huijin. Central Huijin owns 50% stakes in Shenying Wanguo and owns 60% stake in Hongyuan Securities. So that makes the negotiation of the deal pretty easy, just like we did. The transaction-wise, a technical transaction is a share swap. It's using Shenying Wanguo's A share to swap Hongyuan's A share. So Central Huijin also involved in that deal. So that's, I think, in some case, in some degrees, people also speculation they will do the same with CITIC Security in this case. And I just want to add one point is about CSE Financial. Actually, it's the leading broker it's the leading brokers and underwriters for China export as well. As I mentioned earlier, China export has launched IPO registration reform this year. And actually, it start trading yesterday. So. CSE Financial has, by all means, the #1 underwriters and brokers for this market. And so I have a figure here. They have the volume goes through CSE Financial is a 5.6 billion, and they have racked in around 280 million revenues fees from these deals. So I think. For investors, I just want to highlight this year will be a very important years for capital reform in China Asian market. It will be a tailwind for the brokerage firm and for the mergers. I would say because most of the brokerage firm are owned by the central government or local government. So if the deal will be materialized, it will come from the government's decisions. So I would say look for the shareholders, the common shareholders for those brokerage firms, and I think that the probabilities will be higher for those deals to happen. So I will stop here for any questions.
Thank you very much, Roger. Please feel free to share any questions you might have using the Q&A button on your screen. Roger, I want to start things off by I want to ask we have seen who sort of stands to gain, and we see that a potential merger like this would be a boon to investors. Who would stand to lose from such a consolidation, in your opinion, especially if such a deal creates the largest brokerage firm in the country?
Yeah, I think it's a very good question. I think this needs to be looked at the bigger pictures. If you look at all these state-owned enterprise mergers, the government, and because the government is the ultimate owner, the shareholders, largest shareholders for those companies. So they are the decision makers. So I would say try to identify brokerage firms with common shareholders, such as Central Huijin or other state-owned enterprise, and a deal is more likely to be created by this kind of state-owned enterprise. But on the other hand, but there are some particular, there are a few, I would say, private company. It's public company, but it's owned by the private ownership. So those companies might not have a deal might not have a potential merger deals in this environment. So I would say state-owned enterprise brokerage firm might benefit most, but the tricky question is what will happen and when will happen. So this is hard to tell. Is if you know the state-owned enterprise will benefit from this.
I see. I'm going to take a question from the audience. Would there be any figures within the around 100 brokers in China on their profitability?
I think I got this data from the Securities Association of China. I don't think they break down to every details. They only give you aggregate data. They put out the data regularly. On the other hand, I think there are like 20 plus, around 30 publicly traded brokers. I mentioned there are 100, right? 100 brokers, but the other brokers may be size too small and they don't disclose and private owned. So you could get a sense. The top 30 firms, they are publicly traded company. You can dig out their operating data, but for the rest of 60, I would say it's very hard to get those data.
So the follow-up, would such a merger, potential merger, I should say, would one motivation behind it be to make the resulting firm profitable, or is it a different motivation, do you think?
I think let's put it this way: this kind of merger is not purely from the business perspective. You also need to think about the ownerships. Like I mentioned earlier, they are like state-owned enterprise. You should think about what's the reform process, what was their motivation to streamline their shareholdings. I would say that's maybe a better direction to think about what will happen in those space.
Mm-hmm. Another question from the audience is, how do you usually value brokerage firms given their cyclical nature?
A price book. If you be a conservative, you price the book. But as I said, it's like CSC Financial is traded very high valuation on price to book. So that means this speculation happens. It's already happened in the market. I recommend you maybe to look at CSC Financial A share instead of H, because A has a lot of information in the A share, because and I should also maybe go back a little bit. So all the deal, if that's a deal, I think it will happen in the A share market instead of H. So if you look at the A, because both company, both security firms are traded A and H, you will see their A share is the valuation wise much higher than H. So that's why, if it's just arbitrage guy saying why you don't buy low, sell high, right? But that's a technical problem. You cannot buy low, sell high. But the A share is like double the valuation of H. So it must be something. So for CSC Financial, the cause I think is the speculation on the merge.
I see. Considering the latest developments there, do you think that this will allow China brokers to capitalize more on Hong Kong IPOs?
They are trying. I mentioned earlier, is the whole industry, the financial industry is regulated by three different regulators. Only in Hong Kong markets, bank, for example, Bank of China, ICBC can have a security firms. So you will see Bank of China International, ICBC International in Hong Kong, and playing a brokerage role, and also leverage their relationship with a commercial banking client, doing the deals in H-share markets. But for the security firm, I think only the big players, for example, CICC, CITIC, and a few others, have branches in Hong Kong doing H-share deal. So I would say they are trying, but they are not a big players. I mean, in the Hong Kong market, you're facing the competitions from the international investment bank, and you will face, for example, like banks, security arm, like Bank of China International, other firms as well. And so there's only a handful of the security firms can have the capabilities to compete with in this, I would say, international stage. So I would say there are only a few. But I also want to emphasize the second tier player are trying. They are like try to build a branch in Hong Kong, try to get into this, no matter it's a fixed income deal or the stock deal or the equity deal. They try to get that.
I will take one last question from the audience. We have just about reached the end, but so one question is, what about Haitong Securities and Guotai Junan? Do you have any views on whether they are candidates for restructuring?
I think they have an international presence, but I need to be honest with you. I don't study them very deeply to understand their shareholder structures and what's their ultimate bigger shareholders for them. So I don't have a view at this stage. But I think both names, they are the names in my category. They are expanding internationally very quickly. But I have no view about whether there will be a merge.
Well, thank you very much, Roger. That's just about all the time we have today. Thank you everyone for being with us this morning. Do note that Roger is available for research requests and premium services, so please contact your Smartkarma account manager in this regard. And if you have any other questions for Roger, please email us at research@smartkarma.com and we will pass them along. Roger, thank you very much once again.
Thank you, everyone.